Real estate is one of the best ways to create real, life-changing wealth. Although you can make millions, even billions in real estate, you don't need much to get started. Hey guys, my name's Marcin Drozdz. I raised multiple nine figures in private capital. My team and I have launched over 8 funds and done over $3 billion in deals. And in this video, I'm going to break down the 7 levels of building wealth with real estate. Now, if you miss a step, you will stall. Master each step and you can move from your first duplex all the way to playing at a level where institutions control billions. And here's the kicker. At level 4, I'll show you the exact system I use to raise capital on autopilot. Level 1, the house hacker. This is where it all begins. So you buy a $300,000 duplex with, let's just say, a 3.5% down payment. That's about $10,500. You live in one unit and your tenant pays $1,500 a month in the other one. Your mortgage, it's about $1,450. So you're living nearly rent-free while building equity. Now at this stage, you're scrappy, you patch the drywall yourself, you call the plumber at midnight after you tried fixing the toilet yourself. You're at a place where you're figuring out how money works. But here's the shift. You stop seeing your house as a cost and you start seeing it as an asset. So look, this is the first time you're probably seeing your money actually work harder than you. Level 2, the small scale investor. So look, now you've graduated. Maybe you have that duplex still and you bought another triplex. Now you have 5 tenants and you've got some rent rolling in. Maybe you try Airbnb one of those units because you realize that a 2-bedroom rents for maybe $1,200 on a long-term lease, but on short term it pulls in, let's just say, $3,000. Or maybe you start to BRRRR, which is buy, renovate, rent, refinance, and repeat and do it all again. So maybe you buy a property at $150,000 that's really beat up. You put $40,000 into renovations and the ARV after repair value is maybe $250K. So you're able to refinance, pull your initial down payment and your renovation costs out, and the property still cash flows, which is fantastic. This is kind of the level where people start to really make mistakes because they think that owning a few rentals is going to make them wealthy. And at this point, what you're really doing is learning how to manage. You're hiring your first property manager, you're building systems for rent collection, you're dealing with turnover, you're dealing with nightmare tenants, you're learning about real estate laws, you're learning about what you can and can't do depending on where you're buying. And real estate is really no longer a side hustle for you, it's literally becoming a business. In just 60 seconds, I'll show you exactly why most people never make it past this stage. Level 3, the specialist. So here's where you really stop dabbling. And most investors plateau here because they've literally spread themselves out too thin. You've got a duplex here, you've got a flip going on here, you've got an Airbnb over here. As my grandfather used to say, you got your finger in a lot of different pies, right? And here's the thing, it really is a hobby still at that point. Whereas if you look at the serious players around you, and maybe you're part of a real estate group or a network, and you start to look at some of the people that you look up to, what do they all have in common? Chances are they specialize. Now, maybe it's multifamily. Maybe they buy 50, 100, 200 unit apartment buildings. Maybe it's self-storage. Over the last 20 years, I mean, self-storage has outperformed multifamily and retail. Maybe they're experts in it because they prefer not to deal with tenants or toilets and overhead that typically comes with other assets. Or maybe it's mobile home parks because obviously they're recession resistance and residents get to own their homes and you just lease out the pad and you got to provide the services. The whole point is you start to identify the people that are operating at an 8, 9, or 10-figure level are specialists. They really know their business. So when you get to this level, here's how your life starts to look. You start to tour dozens of properties. You're running serious numbers and you're really focused on building credibilities with the brokers and the people that control deal flow in your specific niche in the market that you're focused on. Now, the key growth here is you're building authority. So you're no longer a dabbler. You're not just trying this or trying that. You literally become the apartment guy or the storage gal or that woman that focuses on multifamily. And here's the thing, investors, they really trust specialists. And that's actually why specialists scale. And it's a perfect segue to level 4, which is the capital syndicator. So you've probably at this level hit your ceiling with your own capital, and credit and credit cards and lending only goes so far. So the next step here is start to raise other people's capital. Now, full disclosure, there's rules, there's regulations around raising capital. So make sure you're working with your attorneys to do this correctly. And actually, this is where most operators fail because instead of proactively setting things up in a way where they're able to raise capital before they need the deal, they scramble and they start to pitch when they need the money and they beg and it just doesn't work. And then they say things like, oh, well, capital raising isn't for me. I'm not a salesperson. And look, here's the truth. 20 years in this business, I've trained thousands of people on the very framework of how to successfully capitalize your business. You know what I've learned? Is that the people that are actually not traditional salespeople are the best at raising capital because capital isn't raised, it's attracted. And that's where this concept that I created called the core four comes in. And here's how it goes. Number one, package yourself and your deal so investors say yes to you first. Number two is driving qualified leads before you actually need investors. That way you can convert with trust, not with pressure. And that's actually part three, how to take somebody who just learned about you a few weeks or a few months ago and have them see you as someone credible and trustworthy. And then part four is scaling your capital raising operations so you're not stuck on the phone all day because it's one thing to raise a couple $100,000 for a mobile home park. It's another thing to need to raise 10 or $25 million, $100,000 at a time. For context, I use this exact system to raise multiple nine figures in private capital. And I can't tell you how many times I've had investors pull me aside and say, listen, I actually am only writing this check because of you, not the deal. And that's exactly the kind of level you want to get to within your business. Now, at this level, for context, you're working with high net worth individuals, attorneys, CPAs. You're probably hosting investor calls, running webinars, and you're building trust. And look, if you're an LP watching this, here's why this matters as well. Because the point is, you're looking for the place that you can not just get a return on capital, but also see a return of capital. And the pros, the people that have done this professionally for years, are the people that have systems and processes, and they're not always in a constant scramble. Level five is the fund manager. So, look, raising capital deal by deal works, but it's really inefficient and actually pretty expensive. That's why the next evolution for you at this stage is to become a fund manager. So you raise the capital once and then deploy that capital across multiple projects multiple times. Now, a lot of investors love this too because they get diversification. You, as the fund manager, love it because you have recurring inflows, you have predictability, and you're not constantly going out there to find new investors to fund your projects. Now, here's the danger though. Most funds, they implode because they skip the basics. So, in other words, people get all excited about launching a fund, but they don't have the credibility, they haven't mastered the communication, and worst of all, they don't really understand the compliance behind it, which is why, again, if you're going to be moving on to the fund manager stage, make sure you work with your securities attorney to make sure you do it right. Now, done right at this stage, you're not just running deals anymore. You're literally building out a financial platform for your business. You're issuing quarterly reports, you're tracking distribution, you're managing audits of projects and properties and processes. And essentially, you've gone from just being a deal maker to becoming more of a capital steward and somebody that is not seeing things just for today and tomorrow, but also 5, 10 years down the path. And for fund managers watching, this is how you differentiate yourself. It's not about being louder, it's about being sharper, safer, and more professional than the next fund. Level six, the developer. So eventually, deals get too expensive, returns shrink, so you stop buying and you start creating. This is where you start to buy raw land, get entitlements, and build from the ground up. Now, maybe it's 200 apartments, maybe it's a retail plaza, maybe it's a master planned community. This is where the real fortunes multiply. Think Stephen Ross, Sam Zell, Donald Bren. They didn't just buy, they built. But it's not for the faint of heart. And at this level, you're negotiating with city councils, you're managing $100 million budgets, you're working with architects, engineers, contractors. You're no longer just an investor, you're the creator. And this stage tests everything you've learned because if you can't manage capital, systems, and risk, development will literally eat you alive. And then finally, level seven. This is the institutional too big to fail. This is the final level where the ultra wealthy play. Institutions, pension funds, sovereign wealth funds, literally trillions under management. You've got BlackRock, Invitation Homes. Look, they've bought tens of thousands of homes in bulk, entire neighborhoods and communities. And at this level, cash flow isn't the only game. Control is the focus because you're now negotiating billion-dollar acquisitions. You're sitting across the table from hedge funds, politicians, sovereign wealth funds. It's a totally different game. And here's the truth: when you're at this level, mistakes don't sink you because the government will backstop you. That's literally why it's called too big to fail. Now, this is the end game, and very few people get here, but it's worth understanding how the game is set up because ultimately, this is how the wealthiest players in the world shape the markets that you and I live in. So, those are the 7 levels. And notice each step isn't just a bigger property, it's a bigger version of you. Going from being a scrappy house hacker to a capital magnet to an institutional power player is a process. And at every stage, you're stacking skills, building relationships, and literally reinventing yourself. So the question is, where are you now? If you're at level 1 or level 2, replay the earlier sections of this video and really lean into building out your foundation. Now, if you're level 3 or level 4, that's where systems for capital raisers really start to come in because it's no longer good enough to be good enough. And if you're sitting there as somebody like, well, I'm not on any of these levels, but I'm somebody that invests in projects and people, great. The next time you're looking at somebody to work with or partner with, in your mind, just think about where they rank in that stack because that's going to give you context over their experience, their capacity, and their ability to help you make more money with your money. If you haven't yet already, make sure you hit the like button and subscribe to this video. We've got a lot more content like this coming out here. So thank you very much, and we'll see you on the next one.